Let's move on now as NASDAQ continues to lead the market higher. Which names might be ready to cool off and which ones really haven't joined the rally just yet? Christina Partsenevelos looking at the overbought and the oversold. Christina.
Well, Tyler, if you want to be different and all our retail investors watching, then you might consider avoiding Tesla, as it's the most overbought stock on Wall Street right now. The technical metric, which is often talked about on CNBC as RSI, the Relative Strength Index, measures the speed and magnitude of recent price moves. So if an RSI is above 70, it's considered overbought. If it's below 30, it's oversold. So you want to be between that 30-70 range. More importantly, though, it can indicate a security may be ready for a reversal in price. And that's why we talk about it.
Investing in Tesla can be quite an exciting opportunity for people looking to grow their wealth in the ever-evolving world of technology and sustainable energy. However, like any investment, it's crucial to evaluate the potential risks and rewards involved. As is often said, what is comfortable in investing is rarely profitable. In this video, we're going to explore some key factors to consider when assessing Tesla as an investment option, and assess Tesla's long-term growth potential by considering its expansion plans, international market penetration, and potential for new revenue streams. We will also evaluate the company's strategic partnerships and collaborations, as well as how they can impact Tesla's future prospects. There's so much to keep you all fascinated. So watch this video until the end, and that way you won't miss out on any of the details.
Or maybe it's also the broad electrification of the vehicle fleet, perhaps, Kevin Green, maybe that keeps a lid on crude, as folks often prognosticated it would when we got to the EV world. And we're pretty much here. Tesla's big charging station teamwork with Ford and GM was pretty good for the stock last week. What are we thinking about this week as we're pushing 250 in the shares? First time in a while we've been up here.
Yeah, well, we saw a fair amount of tailwinds for the company over the last couple of weeks, not only seeing the tax credits also being offered for that Model 3 and Model Y, but also having the expansion of that charging center business to Ford and GM. I think both of those are catalysts to the upside here for Tesla. But you're right. If you look at a chart, we actually do see a gap down, pretty significant resistance level at the $254, $255 level. So just keep your eye on that as we continue to move higher in this name. But we do have KGI Securities upgrading Tesla to an outperform from neutral with a price target of $335 per share. They are seeing that the U.S. investments that Tesla has made over the last couple of years are starting to bear fruit in 2023. They also believe that they are going to be one of the biggest beneficiaries of the Inflation Reduction Act.
Tesla shares seem to be much higher every day recently. The stock's risen more than 100% year to date. And this run-up has analysts racing to re-evaluate their 12-month price targets for the growth stock. Some have even revised their targets with more substantial upside for the shares. As investors continue to bet on the automaker, it is imperative to access the company's long-term growth potential by considering critical factors that may affect its stock in the long run. This way, Tesla bulls can rest assured that their investment is secured in this growing auto company. Hey guys, welcome back to Tesla Tomorrow. According to stock analysts, Tesla's growth is pretty amazing, and Tesla's aggressive investment in the electric vehicle space is paying off nicely for the company this year. Same way as the automaker's investment in manufacturing and battery technologies. Tesla is seeing the fruit of its vast network of fast charging stations, with both Ford and GM announcing partnerships with the car company over the last few weeks to make their vehicle more compatible with the electric car maker's charging network. Tesla's charging connector and its charge port, called the North American Charging Standard, charging ports are so rapidly becoming the norm that the US government is unable to resist the ubiquity. Investors continue to analyze the automaker's dominance in the electric vehicle market, taking into account factors like production capacity, sales figures, and market share. Many also evaluate the company's competitive advantages, including its technological advancements, brand recognition, and strong leadership under Elon Musk. But can these factors continue to serve as growth catalysts for Tesla stock? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything happening with Tesla. After Ford and GM both inked deals to let their customers access the sprawling network, several other private charging operators have said that they would also like to add compatibility. For instance, Tritium, an Australian company that manufactures EV chargers, recently said that it would add a connector option for the North American charging standard, which is the plug that was first designed by Tesla and then opened to other automakers in 2022. Similarly, EVgo, which operates one of the largest non-Tesla charging networks in the US, also said it would expand the NACS connector to its network, specifically citing the move by Ford and GM in a press release. The adoption of NACS, which is Tesla's connector, as the NACS, has resulted in Wall Street analysts considering Tesla's supercharger business. With General Electric vehicles from GM and Ford adopting the connector to take advantage of Tesla's supercharger network, analysts believe that Tesla could start making billions of dollars in revenue per year from its charging business by the end of the decade. And beyond the potential revenue from the supercharger network, the adoption of NACS also validates Tesla's approach to charging. Tesla's commitment to innovation is a significant driver of its success. Its technological advancements, particularly in the area of battery technology, autonomous driving, and energy storage solutions, have set it apart from other automakers. These advancements position Tesla to be ahead of its competitors, and it disrupts traditional industries. Because of the automaker's dominance in the EV realm, innovation, and high growth, it garners a higher valuation than traditional automakers. From a price-to-sales perspective, Tesla is at the most attractive level since the start of the post-pandemic recovery on Wall Street. The last time Tesla's PS ratio was like it is now, shares increased sevenfold over the next several months. Over the years, Tesla shifted from developing niche products to affluent buyers, to then making affordable electric cars for the masses. While there have been many naysayers along the way, shares have increased by more than 12,000%. Although the stock may not be the best right now, it is a good stock for anyone seeking to invest in a valuable company. Several analysts also believe that the value proposition remains strong for Tesla buyers over the long term, and many have also noted that vehicle pricing strategies would continue to evolve both upward and downwards, depending on many factors. Even as Tesla sacrifices some margin of its automotive business, it continues to invest and grow to increase future profits. And it is doing that from a position of strength relative to its competition. However, it is important to understand the inherent risks and volatility associated with investing in Tesla, and any stock for that matter. Investors should consider factors such as market fluctuations, competitive pressure, and supply chain challenges from other markets. They should also evaluate Tesla's risk management strategies, including diversification efforts, capital allocation decisions, and contingency plans to mitigate potential risks. And that's why, in the midst of the semiconductor shortage and record high inflation, Elon Musk was already stressing diversification outside of only stocks, saying it's not uncommon to seek physical assets in the recent economic climate. So, if you're selling the news on the GM deal or just looking to avoid volatility in the market, there are sturdy physical assets growth potential out there that you could look into. Assets that can help you put your gains to good use. In fact, today's sponsor is giving you easy access to one of the world's most exclusive physical assets, one with a track record of stable risk-adjusted appreciation for over 3 whole centuries, whose price in the last 26 years has outpaced the S&P 500 by 131%. It's contemporary art, and you too can access it in minutes without needing millions of dollars, thanks to Masterworks. Masterworks has sold over $45 million worth of art and distributed net proceeds to their investors. And so far, every Masterworks exit to date has returned a profit to investors just like you. So, take a look at this performance. With over 740,000 users, Masterworks offerings have sold out in minutes. They even had to make a waitlist for new users, but you've got special access right here, so you guys can just skip it. Click that link in the description and get right to it. For Tesla investors, betting on this leading automaker can offer substantial reward for individuals carefully evaluating the potential risks and rewards associated with the company. By assessing Tesla's market position, financial performance, technological advancements, and environmental impact, investors can make informed decisions aligned with their financial goals and values. But what are your thoughts on Tesla stock right now? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.